Let's go.
Listen. Skirt out the dealership, racing to the paint shop. You gon' need a Brinks truck if I do a bank drop. Driving with my drink up, never let a drip drop. Tune up at your bitch house, that's my only pit stop. F1 Luda 200 on the speedometer. Car came with a stripper pole, miners let a photographer. Pose, Luda back now, aunties doing cartwheels. I've been slinging chickens out of LAX and Hartsfield. Gold, music, movies, TV, triple threat.
Yes.
I got my mama and my partners out of debt.
Yes.
Just incredible, and I'm on the lift off show. I'll take this mic and do this verse up on my jet.
Damn, off top.
Ever since the Hollywood star, I tripled my pay.
I like that.
Tell these promoters I need 500K.
500K.
Cause I'm from ATLA and TA and all I do is win. But that bitch never moved out of my way. Let her know. Hey.
Let her know.
Oh.
Ludacris. Bars, baby.
Go watch the pullover video, best video in 2026,
That's
baby.
a fact. That's a fact, bro.
Real hustler. Ludacris and Glorilla just dropped.
Damn, let them know.
Disturbing the peace still.
All right. Yeah, just make that a session here. I had this thing going. Let me blow this up here. What up, y'all? It's the KRISTOPHER. It's the Christopher Whitney Podcast, the KW Podcast. I'm your host, the host with the most. Just wanted to thank all my viewers. I want to thank all my viewers very much for tuning in to today's show. In my prior one, I said that I was going to have the performance updated in the My Effects book so you can follow my performance. And it's under Ruby Soho 2023. You can see my Currency Capital logo here. And this connects directly to this guy here, the Oanda web trading platform. So it's pretty easy. You can toggle between a live account and a demo account. So I'm just familiar with Oanda, but there's other great companies too. So this is not an endorsement for Oanda. Okay. Sorry, my shoulders are killing me. It's still recovered from an accident I got in. Yeah. Anyway, this was over the weekend. We had, the Iran, U.S. Back and forth bombing. When I heard the news, I was like, "Oh, here we go." I kind of expected it, but then I guess third time's a charm, because apparently Trump really laid it down on them this time. And you know what? He had good reason. Because Trump, despite the GOP, and I'm not making this a political channel, okay, but this is relevant. Despite the GOP, his own people going against him, he pushed forward and extended a olive branch. And the Iranian government should have taken that olive branch, but I don't know what's their deal, but at this point they need to join the human race. You know what I'm saying? I got that from an Ozzy Osbourne song. How's it go? I'm gonna find that song. Okay, it's a good one. It applies perfectly. He's like, join the human race, like, where are you? What planet are you on right now? Kennedy says, did you just parachute in from Mars? Anyways, some of that stuff is about as sketchy as gas station sushi, Anyway, back to Luda while we're on the commercial break. He just came out with this new freestyle, and the song is pretty good. If you're like my age, I'm 48. So Ludo, actually, I didn't Google it, but I heard it on the review. There's the shows that have reviews. That's how I found this. Anyways, just check it out. It's pretty cool. Luda still got it. If you're my age, you've probably seen this and have nostalgia. It's pretty cool. All right, tear it up, Luda.
Just incredible!
Let me get the levels right. Ludacris.
Let's do it.
Look who's here.
How you feeling?
I'm feeling blessed, man. How you feeling?
Come on, man. I'm way more blessed.
They told me my brother was not gonna pull up and kick some bars. I said, nah. When Ludacris get to LA, he coming through to just go crazy on.
Who the hell said that, man?
They done lost their mind, Luda.
Come on, man. We got pullover video out right now.
Facts.
Streaming. We
Going
got
crazy.
Real
New song
Hustler.
with Glorilla.
Ludacris and Glorilla, Real Hustler. Let's talk about
ATL
Atlanta.
is in LA.
Listen.
Let's do this. Come on.
Atlanta, the city, black millionaire mecca, the dirty, the home of the brave. Where we stacking that dough in the trap, keeping a hoe in our lap till our home is a grave. Hey, blow it all in magic. Our strippers are better than buying tickets to Cirque du Soleil. Wait, so many cakes, all in my face. Every day is my birthday.
Let's do it,
Pull
Luna.
out the old school Chevys in the Cadillacs, drop tops, everybody riding on chrome. Fist full of diamonds, blue, red, and yellow. It feel like I got them infinity stones.
Let's do it.
Hammer always on me like Thor. I'm so low key. I keep that Iron Man. Never cared about a comment of an internet troll. Y'all stay on the web like Spider-Man.
Let's
Flow
go.
faster than Captain America, run and get mad green like the Hulk. See no trace of these niggas that mention my name. Should I outline them in chalk?
Why not?
When you speak of Atlanta, you speaking of only the best and you speaking of Luda. Got 2 baby mamas, a wife, and 4 kids. I always been a straight shooter, just incredible.
Straight shooter. Hey, my brother
Got
took
2
some
baby
time.
mamas, a wife, and 4 kids. I
Yeah.
always been a straight shooter.
I like that. Ludacris
Yeah.
is here.
Yeah.
It's been a minute since I had him on the show.
It's
Nailed it. Nailed it. Yeah, Luda. All right. Back to our regularly scheduled program.
Near term at least, and obviously a win for the Fed. The judgment made clear that in the eye of the justices, they think monetary policy needs to be kept very separate, very independent of political cycles. There was a commentary in the judgment around how, allowing the president to dismiss governors at will would trigger all kinds of market turmoil and volatility, and that ultimately the Fed deserves a carve-out among agencies. But as I say, near term, it's a solid win on paper for the Fed and Fed independence, but it does open up broader questions going forward.
Let's talk a little bit about those broader questions, because Justice Kavanaugh said exactly what you're talking about. Uncertainty over Fed independence itself could destabilize global markets. I mean, what implications would this have had for the narrative around central banks that are not just facing challenges
talking
in the
about it, but
U.S.,
y'all-
but almost
Okay.
globally at this point?
Yeah, well, the headline would have been, had the Supreme Court opinion today made the cases that President Trump could dismiss Governor Cook on the grounds that were laid out against her, well, then it would have opened up scenarios whereby the president could come in and dismiss other governors on the Fed board as well. President Trump has spoken openly and publicly about getting a majority on the Fed board, and of course that's all about getting a majority of those who share his view in the economy, which is one for lower interest rates, at a time when many would argue the Fed isn't in a position to lower interest rates. So had that happened, it would have been a clear dent to Fed independence. It didn't happen. However, the justices did say at the Supreme Court,
Exactly.
they didn't define what makes up for cause. They didn't explain much more beyond on this ruling as to whether or not the merits of this particular case would stack up to offer cause. And they said, in fact, President Trump could attempt to dismiss Governor Cook again. That pathway is open to him. So, and after the ruling, by the way, President Trump was out pretty quickly on social media making the point that he will immediately look at ways to pursue this case again. So, as I say, there's a lot to unpack in this. And because it's a legal judgment, it's open to analysis and interpretation in different ways. You have your win for Governor Cook, you have your win for Fed independence, but the Governor Cook case hasn't gone away. It's just going to move now to a different court and continue to be pursued by the administration. And
Win by who?
Broader questions about Fed independence, near
You're a
term,
win by
sure, it's
who?
a tick, but plenty of analysts I spoke to today say there are still question marks over the durability of that going forward.
Bloomberg's the Fed Reserve and economy reporter Enda Curran there with us with the latest. And of course, we're watching commodities broadly, but specifically the latest when it comes to oil prices there. New York traded crude holding most of that downside, 0.8% lower. Had a couple of developments. Morgan Stanley cutting its dated Brent oil price forecast, citing, of course, the faster than expected reopening of the Strait of Hormuz there, but still also talking about the high US exports and the Chinese imports picture remaining low in that broader picture. But of course, this, as we expect, that resumption of US-Iran talks in Doha, conflicting signals from either side, and in particularly relevant is around really ratcheting up the narrative about having control of the Strait of Hormuz ahead of these new talks. And that came from Iran's deputy foreign minister, signalling that Tehran remains very much firm on maintaining control over the Hormuz. These remarks to Iranian state television coming ahead of that next round of talks with the US. We're expecting them to take place in Qatar on Tuesday.
Well, there'll be a meeting on that tomorrow in Doha, and to go into Qatar. I think they've already left, or they're just about getting ready to leave. So we'll see how that goes. But we're doing very well on that front. But the meeting in Doha is going to be perhaps important, perhaps not. We're going to find out.
From Ron, how oil markets are reacting to these developments.
Trump, I guess we're going to find out.
Trading reporter Ronway Nearon. We're also getting this Truth Social post from President Trump saying that gasoline retailers must get prices
Sorry,
down.
I had to pop in there for a second. That was too
high,
funny.
Considering oil is at $68 a barrel and
that guy
headed
that's really
south.
uptight.
So clearly
Look at his
domestic
face.
gas pump prices are still top of mind for the president. But what are we seeing in terms of the price action on this market, given the level of uncertainty over the Strait of Hormuz and how these talks are going to proceed?
Right, Heidi, like you rightfully mentioned, I think the market's eyes are on the upcoming peace talks that will be held later today in Doha. Now, of course, what people are hoping for is that through these talks, which is, of course, expected to pave the way for a more permanent end to this war that we have seen that's emerged about 3-4 months back, is that market is hoping there would be more clarity. And, of course, for the physical markets, the Strait of Hormuz remains a single most important factor that really affects oil prices. Now, of course, we have Iran saying that they do want to maintain its control over the strait, and that's a new development since the war was waged a couple of months back. Before this, of course, the strait remains open and it was free for commercial shipping. However, this is expected to be an item that would be debated by the US. Right now, the Strait of Hormuz traffic has slowly resumed, or rather, it has slowly gained since it came to a standstill at the height of the conflict.
3 months.
Some shippers, those that are more risk adverse, they would choose to perhaps wait and see to see what's coming out from the peace talks, while there are those that are a bit more adventurous that have went ahead with the risks. So right in the Strait of Hormuz, we see two very clear passageways, one that is more US friendly and one that's more Iran friendly. And of course, the market is hoping that through this talks, there will be more clarity over how these transits could continue to take place even
when I said
after
the short oil last week,
negotiation period.
Triple leverage, that is times 3.
When it comes to the sort of outlook for the market, I'm just passing through this Morgan Stanley note, and it talks about the twin factors of US exports remaining
they take a haircut in those ETFs,
Chinese
so
imports
let's just
remaining low, right? So does that kind of take us full circle as we look to the expectations for next year? What does the fundamental supply and demand picture look like if you assume that the strait will remain open?
I suggested as a signal. I should watch my wording here.
So if we look past this disruption at the Strait of Hormuz as a result of this war. If you remember, right towards the end of last year, the markets were expecting us to be headed into oversupply, and oil prices were expected to dip on continued production from OPEC. But of course, since the Iran war, much of these factors have changed. We have UAE leaving OPEC, and of course, right now, as a result of the Iran war, we have US exporting more crude oil. And as also a result, the world's largest importer, China, its appetite for crude oil imports remains muted, which is why these two factors, coupled with the faster than expected resumption of commercial traffic through the Strait of Hormuz, has led banks like Morgan Stanley to revise their price forecast further downwards. Now, of course, banks like Morgan Stanley, they are expecting that the market in the year ahead, in 2027, would resume and will go back to what was initially expected, which is an oversupplied market. So based on this trajectory, banks like Morgan Stanley would expect oil prices to continue to fall. And if we can look at what has happened so far this year, right now the supply disruptions have led to a temporary blip or temporary raise in oil prices. But in the longer run, which is going to come in the next year or many more years down the road, the wider market expectation remains, which is markets remain oversupplied and are headed in that direction.
I'm not even going to try to pronounce his name.
Bloomberg oil trading reporter
It is very unique, though.
of course, with the latest on oil prices, as we're seeing the downside pressure from the
But,
Iran war.
between you and I, it
that's
looks like he
also
used too much
reflected
Botox.
on the main industrial
I
production
could be wrong.
numbers out of Japan, because year on year we're seeing a huge surprise to the downside of a contraction of 1.7%, contracting from gains in the previous month. Also much below economists' expectations. We had seen the downside surprise in industrial output also in the South Korean number for the month of May. We have seen strong AI-related equipment exports, not only in Japan, but also in South Korea. But perhaps it's that refining sector that's feeling the pressure. More ahead, this is Bloomberg.
Futures are red, but that's nothing. That's basically flat. Look at the 5-day. So the markets are melting up here because the things are getting resolved. Unfortunately, it seems that the only response that the U.S. gets is more bombs, and Trump went way out of his way to try to push peace, and he wants to wrap this up and move on. And I think everyone does, And so I sincerely hope they wrap it up and come to a peaceful solution where everyone benefits, And I just hope that it's over soon, because it's getting so old. I'm like, I dread to watch the news sometimes, guys. Like, I do this for y'all, okay? I hear other people say that on YouTube. They're like, oh, we do this for you. They're not kidding. So you gotta subjugate, is that the right word? Subject yourself to negative content. And that stuff, after a while, is like death by 1,000 scratches. It's like getting, you get pricked by a needle, you're like, ah. But anyways, you get the point. More respect for some of these journalists who actually do their job.
When it comes to chips globally, could we see the upside in today's trading?
It was actually a really whippy session in the US, resolved to the upside. We saw SpaceX, Micron, a lot of these stocks trading flat to down early, and they closed on the upside. So you see this kind of intraday volatility helping out the trade. That should calm nerves in Asia, especially in the likes of SoftBank, which has been on a downtrend over the last couple of days, especially as the hyperscalers in the US find a level. We saw Google lead gains on the NASDAQ. So pretty decent setup here for Asian markets. One big cloud continues to be the volatility around the memory space. I mentioned Micron trading in almost a 13% range overnight, and that kind of tracks the Korean volatility recently. So that is going to be something really closely watched. Also, currency weakness, whether it feeds into the weakness in equities or they continue to be separate, that is another macro trade. And lastly, we have the huge foreign selling that continues in both Korea and Taiwan. Yesterday was a massive day of foreign selling in Korea, almost $5 billion. Taking the year-to-date total to almost $92 billion. So that continued foreign selling really has to be watched for the future of this market.
Bloomberg's market reporter Anthony Stevens, of course, will continue to watch that overseas selling that Anthony just talked about, but also everything to do with the Japanese yen here in Tokyo, because we have seen it now that close to that 40-year low. We have touched that level past 161 at that 161.98 in the overnight session. Of course, we are on intervention watch also for authorities potentially being able to step in to really support the currency. We haven't seen any moves now. And we have seen actually Citigroup giving up on their long yen call at this point. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg.
Yep, we are on the long yen call. Sherry On said the long yen call, and that's referring to the forex trade here, because we have yen in the denominator, and we are long, or we bought this currency pair. And so currencies are traded in pairs. So the currency by itself has no point of reference. And just in basic math, you can't measure anything without a point of reference. Like back in the good old days, they used to give directions. You turn left at the big brown sign, then you take a right at the red mailbox, go down this dirt road, and you're like, damn, if you're from out of town, you'd be like, that sounds sketchy as hell. But actually, it's very accurate directions. You're like, oh, there's the brown sign, there's a red mailbox. Shit, there's a road right there. I would have never saw that, But anyways, I digress. 7 o'clock, market's open. We need to get back on track here. So we're on intervention watch. The yen is getting to that point. But you know what? How many times are they going to throw good money at bad? It's been 30 years. Just look at the long-term charts in the stock markets, the bond markets, and the currency for Japan. They went through 30 years of reconciliation. And you can see the yen on 3-month chart has just been on a tear. And so this was the last time they intervened. See that drop? And so that's what they call the widowmaker trade. We are in that potentially. So this could drop, but the overall forces. So the bank it's got this flood coming in, right? And they only got so much money, so much concrete in their storage. They took 10% of their concrete out and built this makeshift dam, and it stopped the flood for a second, but the flood just keeps coming and building that pressure up and bust through. And then so the dam came up here and it burst through. And this has been going on not just one time. This has been going on for years. That's why it's dubbed the widowmaker trade. That's why Zero Hedge would always laugh whenever they do that. They show the old governor Kuroda. He'd be like this. It'd be a close up of his face. He'd be like, ah, and it was that's where the what is it? Where Kato came from? Not Kato came from, but it's like Kato from Pink Panther. But when he hired Kato to make sure that he never gets mediocre, to always be on his game, because Kato would come out of nowhere and be like, "Wah!" and attack him, and he had to defend himself, right? Well, that's who Governor Kuroda was. He'd wait until right after Christmas, where trading and volumes are super slow, no one's paying attention, and they'll just drop $80 billion. They'd be drop the mic, $80 billion. Boom. And then you get that. And then Kuroda would be like, ah! And then all the pundits on Bloomberg would be like, we told y'all this. They're on Policy Watch. I'd be like, yeah, but I don't think they can afford to do it anymore. And every time they do that, it's like the shots you take to make you stronger, steroids. Yeah, steroids make you stronger, but then when they wear off, they leave you weaker than you were before, because now they just hurt your body in the process. same thing. And they leave them more in debt, and it causes more inflation when they print money, monetize their debt. It's like pouring water into coffee. It dilutes it. It's a dilutive effect. Same thing. It seems to be holding though. Yeah, it's holding the line here. Yen strength is also getting pushed by the war. So as the war wears off, the yen, yen weakness is going on right now. Here, let's take a look at dollar strength for a second. Okay, 3 months, dollar's been on a tear. That's causing the weakness in the yen. But the yen is also a safe haven. So it's just very stable currency for like the US dollar and the Swiss franc or the Swissy. They're like financial bunkers. So if things get crazy in the world, you put your money in those currencies. They usually strengthen. So you would go long any US dollar pair, like USD, JPY, USD, CHF, which is Swiss franc. And you would short the contrary, like EUR, USD, or that's Euro dollar, US dollar. So if you short the US dollar, the Euro US dollar, since the dollar's in the denominator, you're actually long the dollar by shorting the pair. So I always do the math in my head every time I do a measurement, an observation, just to double check, because there's so many flip-flops, and it usually sends people in a spiral. It's a lot to comprehend and putting into form. But the good thing is you have me as a guide here to help along the process. And, I'm still learning too. Even though I'm a profitable trader, I do make mistakes just like anyone else. But as I learn from my mistakes, you can learn along with me. So anyways, we're still along this trade. We're on intervention watch. Market's just open right now. So let's see how things are looking on deck.
Ahead of this next round of US-Iran peace talks that we're setting up for in Doha. Brent crude at the moment 1.6% higher there. We had New York traded crude holding on to losses of under 1%. And we're watching gold as well, which of course has been one of the most disadvantaged asset classes since the war began, down 24% since late February. We're seeing gold holding on to most of those losses. Australia coming online pretty flat after putting on the most in about 2 weeks, Jerry, in the previous session.
Heidi, plenty for investors to digest. Let's bring in Chris Brigatti in order to break all of this down, CIO of SWBC. Chris, great to have you with us. Should I start with the AI trade, given that we're in the Asia session right now? That rebound that we saw in chip stocks, after that on and off tech sell-off, that rotation that we saw, is this sustainable today?
I think it is. The AI trade has got a lot of legs to it, a lot of momentum behind it, and the ultimate benefit for the market is to really kind of get on the wheels behind this and really ride the train down the tracks. And I think the AI trade really has a lot of room to run.
Where specifically are you looking at? Because even within Asia, we're seeing so much divergence, including with Chinese tech as well.
A lot of my focus is looking at what I call AI adjacent trades. They're trades that are going to benefit from what's going on in AI, and it's everything from memory chip makers down to hardware and durables that are going to be needed to build out the data centers. So it's things that might benefit from the AI adjacency of the trade, and ultimately those types of companies can really carry a lot of benefit for investors and not have the same type of volatility or exposure directly related to it. And there's a lot of upside in those.
Yeah, let's talk a little bit about upside. How much does it compare with the valuation levels that we're seeing already in these run-up of stocks in the heart of the semiconductor trade? Of course, those chip makers that we're talking about in South Korea, in Taiwan, in China as well. Do adjacent sectors have more room to run?
I think they do. I think the AI trade is a multi-year trade. We have many years to go, and the memory chip makers are specifically benefiting right now from the need for their memory chips to be included in the entirety of the need for AI. So as we see AI expand, as we see more data centers, we see an increased need for the memory chips, and they're going to benefit down the road for a further period of time. They've had a massive run. There may be a pullback in here at some point, but when you're looking at different memory chip makers, including Samsung, SK Hynix, and Micron, kind of the three big ones, you're really looking at companies that have had a big run, can continue to go further. Maybe there's a pullback in here, but ultimately I see more upside coming.
What are you watching here in Japan, especially when we talk about adjacent? We could talk about chemicals, we could talk about equipment makers as well.
When you're looking at things that are going to be used as components for these types of trades, so you're looking at something like Hanmi, those types of companies that are having components, whether it's directly related to the chips or ultimately the infrastructure needed, and those types of companies can really continue to do well, and they should. If we believe in AI, which I do, that it will be a longer trade, then those types of companies have a benefit, and down the road they're going to see some really big upside as well.
Yeah, we could see even more upside if the Japanese yen continues to weaken. At what point does the currency at a 40-year low against the U.S. dollar become a risk?
More upside, Japanese yen continues to weaken, she said.
You know, that's the big question, and that's something that we're really struggling
and this
with
trade
to
will come back.
The risk of the Japanese yen continuing to be weak play into the trade. I think there will be an opportunity.
The Japanese yen will come back,
but there appears to be more downside coming.
That's why
so
I haven't cut my losses yet.
To say that there's an
and I'm over my margin, but
ultimately
the margin policy on Oanda is 48 hours.
Benefit to the market, some real change in terms of what the yen is doing, and a little stability. And once we see some stability, there will be a chance to enter that trade.
Definitely when it comes to markets, that stability seems to be lacking in the South Korea market with all of that volatility that we've seen. The Korean won also continues to see record lows. What are you expecting to see in that market that seems very much concentrated on a couple of stocks?
That's the thing. The KOSPI is very heavily concentrated between Samsung and Hynix. What they do is they are probably approximately 50% of the market value of the index. So as those two stocks go, so will the KOSPI. So it's very unidirectional. It is very highly correlated and tied to those two securities. And ultimately, if we do see a pullback, and we have seen that periodically, we do expect the KOSPI to kind of take it on the chin a little bit and underperform. And perhaps that's a good entry point for players. Like I said, I think the trade has legs, and these AI adjacent type of trades specifically should have that opportunity.
I agree.
So looking for a pullback might be the right opportunity for investors.
Buy the dip, don't trip.
Really good to have you with us, CIO of SWBC. Take a look at Samsung and SK Hynix right now. We're not necessarily seeing that pullback in today's session. Still gaining ground. Of course, we have heard now that these two companies will be building 2 new fabs each. We have seen that $880 billion of announcements, that initiative from the government when it comes to investing in chips and AI. More ahead.
You're on the government.
This is Bloomberg.
Guys. Listen, Irani's government has no cars, and the market reflects it. Over the weekend, they had all kinds of bombs. And then you saw how it opened up over the weekend. I can go back to the chart, but you saw it. So the fundamental thesis of our trade has not changed. And until the fundamental thesis has changed, the facts have changed, we're going to hold on to the trade, and we're not going to let the noise shake us out. That's where the retail crowd gets shaken out. But I got your back. So check my channel. You'll know where I stand. And if something changes fundamentally, I will immediately post a video, because that's great information to post on. I'll be all excited. It's like a news break for one of my channels I like to watch. When news comes out, they like to break the news. But I'm not breaking financial news, but I kind of am, because I'm breaking signals. That's news. I'm saying, hey, look, you might want to consider buying oil in the ETF, yo, and go short last week since this thing is winding down. Or, hey, we should go long the Australian dollar, Japanese yen, because the bank is out of ammunition and the current that's the direction of it's too strong because of all the economics that are tied behind it, which I went into detail in the last episode. I'll put a link onto that here in the end. It'll be on this side, I think. And then click my logo to check all the channels out. And if you are new here, you can get caught up. And when I make reference to my prior video, you can get the detail as to how we came to the conclusion as to what signals I'm advising here. And of course, we're never too busy for referrals. If you have anyone that you think will find this useful, please share it with them. Hit that little arrow button, click that, and it'll pop up and it says share. And you click that, and then it'll say link, and then have a little tab thing. You just click that, and it'll copy the link. And then you go into whatever media, or this text message or email or whatever, and you just left click and paste that link into the message and send it. And then you click on the link and it'll go directly to this video. You can even do it on a specific time frame too, which is great for comments. So you can, in the comments, just look at the bottom here, in the bottom left somewhere, if you see my cursor here, it will say the time. And so say it's like 1 hour and 12 minutes and 33 seconds. Put 1 colon, 2 little dots, 12 for 12 minutes, colon, and then 33 seconds. And then say, hey, KW, what's the strategy if the Bank of Japan does decide to intervene again? ? And you'll get a response from me right away because I get notified. And that is a very good question. So if anyone wants to answer to that, they have to send me a comment. That way I know. Plus it helps my viewership on the system or whatever. So please like and subscribe. It's KRISTOPHER, KW Podcast. It's KW signing out. See you on the next one.